Yes, indeed.
Hey there, everyone. This is Howie. It's the 14th of February, which is Valentine's Day. And I've got some updates. So, the first update is I've added another stock to the portfolio, which is weed stock. So, I just bought this morning. Not a good result so far. It's down almost 3.59%. Entered at 62.36 market open, and we're currently trading at 60.20. However, the AFN stock, the first stock I purchased on February 6th, has broken through. It's now up 6.88%, so I was able to move the stop loss to break even, which is 53.33. So I just marked this one as sort of green, indicating that it's essentially done. Set it and forget it. The only caveat would be 3 months from now. So, early May, if this is still not sold, either break even or up to 15%, 61.33, then I would consider, moving on and selling it at its current market value. And I wanted to discuss one thing that was sort of weird. The CIGI, I was quite frustrated with it. The reason being, I bought it at market open, and it was tremendously high for the day. Like, I'm going to bring up the graph so you can sort of see what I'm talking about. So here's CIGI. I have it on a 2-day chart so you can see. So I essentially bought it right at the open of this day, and you can see it opened at 95.50, and immediately, this is 1 minute candles, in the first minute dropped down to 93.49. So essentially a $2 drop in 1 minute, and then 1 minute later dropped to 92.24. So unfortunately, it was sort of like the worst possible time to enter the stock was market open. It closed, if I bring it back to say 5 days, you can see it gapped up by, this was the triggering day to make me want to buy it. It finished at 89 something, and then gapped up to 95 when I entered it. So it's one of those things where I may consider, instead of always entering the stock at market open the next day, if I'm paying attention to the market the day before, and if I see a stock near the end of day that's met my criteria, it might make more sense to enter it the end of that day as opposed to waiting to market open the next day. Now, this may be anecdotal and this may balance out, because this could have gapped down a couple dollars and I could have entered it way lower. So it might just be like, hindsight, being frustrated. But if I look at the weed stock, which I also entered this morning, it sort of had a similar experience. I'm just bringing it up, and let's put this on the 2-day. Not as bad as the last day, but so weed stock closed yesterday at $61, and it opened today at 62.30 something. I got in at 62.36, right? So the same idea here. I got in way up here, and then this isn't quite as abrupt, but very quickly it sold off to $60.70 within the first, let's say 15 minutes of trading. So again, had I entered the stock close to market close yesterday, it would have been more around 61.10, and this stock certainly did what I wanted it to do on the day. My only fear of looking at it from this perspective would be if I see a stock, say it's up 4% on the day, so I'm going to enter it the next day, and then I purchase it near the end of day, and then it sells off by 1 or 1.5% in the last 5 or 10 or 15 minutes of the market, then technically it wouldn't have met my criteria of 3.5%, and I would be owning it outside of my rules. So I'm not sure what I'm going to do about this, if it's something that I'm actually going to implement to buy it sort of near the end of day as opposed to the next morning, but I'm certainly going to keep my eye on it. And another thing I did, which I'm pretty stoked about. It took me a while to figure this out. I'm working with the Google, what's it called? The Google Sheets, I guess. So it's their version of Microsoft Excel. And I was able to pull up sort of a running and constantly updated tally of the TSX market. So essentially what I have here is this is how much the market is up or down since February the 6th. So right now the market is up 2.19% over between the 6th and today. And essentially how I did this was I just pulled up the Google Finance and I used OSPTX, which is the entire TSX market, and then where it was at close on the 6th, which was right here, 15363. And then I have the current TSX, which is just going to be OSPTX. That's updated here. And then I do some math on this one to basically get the percentages up or down between these two numbers. So this gives me a sort of ongoing tally of what the TSX is at. So I can see, okay, my stocks invested are up $981, which is 0.7%. And the entire market has moved 2.19%. So obviously I'm below the market right now by, 1.5%, we'll say. However, I'm still not fully invested. So this 140,000, I only have about 100,000 invested, and up until a couple days ago, I only had 20,000 invested. So it's not that accurate at this point, but I think over the course of 30 days or 60 days, it will get more accurate as to how I'm doing against the market. Because really, it doesn't matter if my stocks are break even. If the market's down 3%, I'm winning, and obviously vice versa. If my stocks are making 5%, but the market's making 8%, I'm losing, even though my stocks are up. So that's where I am now. The next question I need to answer, and this is another tricky one, is this weed stock. So this weed stock, I put the average true range, it's $3.58, which is massive on a $60 stock. Very, very volatile. So the percentage average true range is 5.74%. So that means it can move up or down close to 6% in a day, which is, again, big. So that puts the ATR times 5 at $17.90, or ratio-wise 28%. So this is a big number, and it's not a number I'm comfortable with. Like, I'm not comfortable with the potential to lose 30% on a single trade when I'm trying to get 15% profit. Like, I'm fine being at 15%. Even this number, 17%, it's higher than I like, but it's not terrible for risk reward. But this number is just way too chunky. So what I might add to my swing trading rules is to have a cap, like the maximum stop loss I'm willing to risk. And if the ATR times 5 is higher than that, then I'll either not even enter the stock at all, or I'll just cap it at 20%. But what I'd like to do is I'm going to go through the history that I had done previously, where I kept track of like a bunch of stocks and did the ATRs. I did that in a previous video. And I'd like to sort of compare to see whether it makes more sense for me not even to enter a stock like this because it's just too volatile, or if it makes sense for me to cap the stop loss below the ATR times 5. So I'm still working on that, and when I come to a conclusion, I will certainly do that. And I think the last thing I'd like to mention is that I think, at least at this point in the market, I'm going to have one more stock that I'm going to be able to enter. So it looks like there's one triggered, which is, oh, no, never mind. It's AFN. So it's the one I've already entered, so I'm not going to enter it again. So we will see. I'm up to 5 out of 7 stocks. And so I need to enter 2 more. So perhaps by the end of this week, I will have all of my stocks invested. If not, it'll take me another through into next week. But overall, I'm enjoying the swing trading. It's a lot easier, even with now that I have some more stocks invested. We'll just see if the results pan out. And this volatility of, minus 4%, for instance, on the CIGI, I mean, this is devastating if I'm day trading. Both of these numbers would be horrific if I'm day trading and moving my whole account around. But in a swing trading, there's been lots of situations where stocks might have to move down 3, 4, 5, 6, 7% and then move back up over the course of a few weeks or even a few months to get to where we want them to be. So anyway, I hope you enjoyed this video, and I will continue to provide updates as we go.
Yes, indeed.